every trader's focus is to get low spreads and finding a perfect strategy. They also focus on proper entries and exits. However, before any decision is made, look for a reliable broker. We all want to have good spreads and commissions that allow us to get into the blue faster. At HankoTrade, having spreads as low as 0.0 pips with leverage available up to 500 times is just one click away. You may also choose from 3 different account types, with a minimum deposit as low as $10. Built by traders for traders. Trade and control with our recommended broker, HankoTrade.
Hey, what's going on, everybody? Welcome to SST. My name is Ron. My partner is Dave. I hope everyone's having a wonderful day today. Hope everyone's catching some pips. I hope everyone is learning and earning. Guys, we're going to break down. This was a trade signal, a trade idea we sent out to the snipers in our Discord channel on GBPUSD on a 15-minute buy opportunity. So I'm going to break down the psychology of what we were looking for and why we set this trade signal to the group. And I hope you guys are enjoying these trade recap videos. Make sure to like, subscribe, hit the notifications, leave us a comment, guys. Let us know how we're doing. Give us any feedback, guys. We really thrive off of you guys, and we listen to what you guys are saying. We try and do whatever you guys want. We're here for you guys. So thank you guys very much for all the support. We appreciate you guys. Now, I don't want to waste your time. Let's get into this. We do these videos about 10 to 12 minutes to keep you guys engaged, give you guys straight. Let's get right down to the meat of what we're talking about here. Let's not waste any time. So we send trade signals on everything. We send Forex miners, Forex majors, we send commodities, we send on indices, everything. So whatever we can see, if there's a trade set up, we're going to send out an idea. Normally, we like to take advantage of the New York sessions, 8:30 a.m., 9:30 a.m., 10, 11 for our trade signals, because there's more volatility in the market, there's more volume. So what we're looking for is, this is GBPUSD. The chart that we're using is Global Prime Provider on TradingView. So each one of these individual candlesticks is 15 minutes for open and close. They have wicks which represent the range, the high and lows, and we teach all of this in all of our courses and everything that we do here at SST. So this is now how the pound dollar was leading into 8:30 a.m. on July 13. So this was a trade setup that we set for July 13, but let's walk into it. What were we looking at? Okay, so GBPUSD, the pound dollar, is decreasing. It's coming from a higher time frame up here where it was 120, making lower lows, lower highs, lower lows, lower highs, lower low. It dipped all the way down to 118 down here. So we have to identify this area on the 15 minutes. That's like a 15-minute low. And when we were down there, nice little double bottom, it came back up. It broke this neckline right around here. So you can see this neckline broke, and we continued to push up. And it held around here. So you see where a lot of the volume is consolidating, like around here. So there was a lot of consolidation to the left, and then we continued to push back down where it made this low back up. It broke out higher high. Okay, so the bulls are trying. It's trying to break out of here. It held a nice higher low here. They brought it out, but now leading into 8:30 a.m. when we had some news, there was bearish divergence. If you guys are learning what divergence is, the 15-minute candles volume were making a high and a higher high. But if we add a momentum strength indicator, in this situation, we'll add RSI. A lot of you guys are very familiar with how RSI works. You see that we're in this overbought condition around 70. So 70 or above is considered to be overbought, but the market was making these highs. Looks like they were grabbing some liquidity to the high so that they could bring it down. This is more hidden divergence, where it's not sloping down, but it's not breaking above here. So the strength and momentum is staying pretty steady while the market is increasing. So we could anticipate maybe this big bearish drop and see how far down it comes down to pick up liquidity, because maybe what we were looking in our trade signal was to come down pick up the liquidity and we were to reverse and make some new highs off of this grab. So let's now focus on some key support areas in the market. Okay, so number one, we got to look at this drop that came down from London market. Here's London, 3 a.m. This is London. So we want to kind of find where London's kind of support area was on the 15. So we have this area like holding right here, 118.90. We can see from the left of the chart, no volume was breaking above it and got rejected. So it's a clear resistance until this candle right here broke above and we held above. And then we tested it a few times during London. Tested, it bounced and went back up. We tested over here 445, it broke, it violated, but it came up and closed. And now we start to see where we're starting to hold. We're starting to hold below this area. Okay, so sorry, let me just change this to white color. So we are holding this level. This was the big break of the candle. So what we're looking for is maybe they grab the liquidity, it doesn't break below here, like this area will hold as a demand, a support area, doesn't really break down here, but maybe they come down to pick up some liquidity. Okay, so we'll draw a little demand zone. And what we're looking for is a possible reversal in the market, but where are we looking to buy? What are we looking for in here? So what we did was we sent out a trade signal to our SST Discord channel, and this is exactly what it was. It was set up on July 13, right here, this time, right around here, at entry 118.90. So we're targeting this area over here, and this is 50% of this big bearish volume in this candle. When you understand psychological levels, you're going to learn how important 50% levels are, and this is what we teach in our program. It kind of goes off with Fibonacci retracements as well. So we're looking for 50% of this volume candle so that we can get above there, buyers can come back into the market and take momentum. So we're looking for a buy above 118.90, above here. Okay, and where would we place stop loss if we do get into the trade? Stop loss 118.30, 118.30. So we're looking to open up stop loss 118.30, like right around here. We want to be above this candle, like if it can grab liquidity and come back, so we can be protected down here, and we're also protected with this area. But if the volume starts to go up in profit, we can take our stop loss and we can start to reduce our risk. And TP, we're looking for TP at maybe 194. Okay, so like right around there, we're looking to come back up to these highs. We're looking to come back and retrace back up to here if they pick up the liquidity down there. Okay, so let's run it now. Let's see what happened. And sometimes the candles are not right away. They might have to take a little bit of time to accumulate down here, but this is a trade signal. It's a static area. We could hold this throughout the day to see if when the volume gets above there. So let's break down. This was 8:30 a.m. Eastern. Let's add another 15-minute candle. So look what happened here. It opened, it came down bearish, but it made a higher low. It came all the way up here to our intended area, but got rejected. So no volume closed above here. So therefore, no trade, no buy. We're looking for volume to close above this area. It got rejected and pushed down, but we have some buyers in the market on this candle. So let's go into 9 a.m. now. Okay, so 9 a.m. opens up. It opens right here off of the close. We came back down, but we're holding now. So you can draw a little bit of horizontal lines. We're starting to hold some 15-minute support structure is being built at 118.42. We came up one more time. We tried to break our 118.90 area, the 50% level of the big red body candle. So you can see it's still holding supply right there. It's still holding the supply. We get rejected, but the body closes right here. So you can see that the body is getting bigger and bigger. It's filling with buying volume, but we really need to close psychologically above this area so that we can come up and test these highs. So therefore, no trade has been taken. No volume closed above 118.90. Let's go into now our next candle. So again, it came up, this time it opened bullish and got rejected right away. So no buy. It came back down and we're making a higher low off the bottom, but we close with bearish volume, okay? So you can see that there's still a lot of supply in the market pushing down all of this buying momentum. So we gotta wait till maybe 10 a.m. going into after 10 a.m. Still 9:15, 9:30. It's not there yet. It's building. It's consolidating, guys. So this is what happens in the market. Sometimes we're not always going to get into a buy. We're not always going to get into a sell. Sometimes the markets move sideways because they're accumulating for their next move. When you understand the market phases, market cycles, we've got an accumulation, a redistribution of that volume, another accumulation, then we might have a redistribution of that. So that's how markets move, guys. They don't just move up and down. There is a little bit of sideways. You have to identify these to become a better trader. And see how we're still now consolidating in between the supply area right here, and it's the bigger demand area, but I can start to locate that we're getting a little bit of demand coming into the market where we're holding right here. So it's a battle between the buyers and the sellers. They're battling. The buyers are pushing it up, the sellers are pushing it down, but the volume is now, if you watch, you can draw a little bit of trend lines. So you can start to see now we are slowly trending up, okay? Every low is a higher low. So it is building off the bottom, but we're not making new higher highs above this supply area. Okay, so there's where they break. They break it right down there, but they come down to pick up liquidity. They bring it back down to pick up liquidity. Now 10:30, you have your big bullish break candle. So you can see how it's breaking above this area right here. Finally, it broke at 10:30. We get the volume close above this area. And what we could do now, our next candle, now we have confirmation, we closed above. We could enter on our next candle. If it's like a powerful green bullish candle ignited, we get into a trade, we place our stop loss, and we can continue to ride it, or we catch maybe a retest if it retraces back down and we buy the wick on the confirmation. So this candle retraced right down to here, okay? So you can see where it held support right here, and we could enter in a buy, okay? This was where stop loss, okay? When you get into a trade where I suggested stop losses, but now you can start to see that it is building, it built this area. So you can take your stop loss and put it at that area to reduce your risk. When you get into the trade up here, you can see that maybe if you wanna have a tighter stop loss, you could move your stop and you could bring it to this level if you like. It all depends on how tight you would like to put it. Now we see that we break a new higher high in the market above here. Maybe this thing is going to continue to run. Maybe it continues to come back down and retrace. Okay, so it retraces back down, but the breakout was right here. So number one, we had an impulse break on this powerful 15-minute candle, but if you're following how the volume is building, you can maybe take a little feeler buy on the breakout and then add another position on the retest. So let me break this down too, and how you can also go down to a lower time frame. I'm also going to show you that strategy as well. So this was everything was on the 15 minutes. We didn't get any volume close above until this candle at 10:30 a.m. But if you're adding a feeler buy on the build up, you could have got the breakout. So the entire move was a breakout from here and continued up there. So it was about almost 80 pip move for the two 15-minute candles. If you grab the retest, if you were not part of this candle, if you were still patiently waiting for volume to close and you grabbed the retest candle still gave you a nice push for about 60 pips, okay, from here to there. If we want to look at how to trade this also, so you can do your top-down analysis on the 15s, but if you're looking for 5-minute entries, if you're looking for those sniper entries, right here, guys, look at how it looks on the 5-minute candles. So most snipers also entered in on the 15. So here's the 10:30. Okay, we see the 15-minute candle, 5-minute candles breaking. There's 10:35. Our 5-minute candle closes with volume above that area we were looking for the buy the whole entire time. We get it now. So we're closing above this big candle, 50% of it. There's the close. Here's our retest. We could enter in on the bottom of this candle right here, and we could maximize that move. It's a higher high, higher low, higher high, higher low, higher high, and there's all your pips. We could have entered at 10:35 on that 5-minute candle and maximized 75 pips. So that's how we break down our trades, from daily, 4-hour, hourly, 15-minute to 5-minute. We could even enter on 1-minute candles, guys. Go down to your 1-minute time frame. If you're a 1-minute scalper, most of us at SST, we scalp 1 minutes as well. This is where we learned everything. Look at the 1 minute right there, 10:39. 1 minute volume closes above. We could have entered on any one of these pullback one minute candles right there. I could have entered right there. Buy, stop loss could be below this area. This is all of my supply down here, and I take advantage of all of those 1 minute candles right there. So we give ideas on 15 minutes to give you guys time to understand the charts, to give you guys, we give you the provider. You can analyze with your technicals to make sure there's confluence. But for entries, you can enter in on the 5 minutes, 1 minute, but you need to really be patient and disciplined and watch how volume closes. It's very key. So thank you guys so much. I don't want to keep you guys too long. I know attention span is about 10-15 minutes, but please guys, I hope you guys are enjoying these videos. It's trade breakdowns that we send out to our team. It's a psychology that we go through when we're looking for these trade setups. I hope you guys are learning. I hope you guys are earning. Thank you for all the subscriptions. We're almost at 40,000 subs on YouTube. We appreciate all of you guys. Like, subscribe, notifications, you guys know it. More videos coming. Thank you guys so much. Enjoy your day and keep grabbing those pips. Thank you.